on our Cashflow Management webinar today. My name is Carol Flockart and I'm a partner at Sheen & Tate, and I've got Elspeth Mackenzie with me today.
Hello, I'm Elspeth and I'll be speaking to you very shortly.
Now, Elspeth is an assistant manager in our business support department. Now, this is the first of our webinars in our business webinar series. We had asked in our invitation we sent you if you need a business MOT. And over our series, we'll be reviewing a number of areas aimed at giving your organisation a health check. So we're looking at cash flow management today. We'll be turning to business plans in our session in January. We're running a payroll real-time information update session in February. And then we're looking at forecasting in March. What we aim to do today is present to you for about 30 minutes, and then we've got plenty of time set aside for any questions that you've got. On the subject of housekeeping matters then, just a couple of things before we start the session. If you would like to ask us a question, please put them in the dialog box, and you can see in front of you on the slide a picture of what that dialog box looks like. Please do submit your questions at any point during our session, and then we'll run through those at the end of the presentation. And we'll also remind you about that questions option later on. Now, if at any point you can't hear us clearly, you can let us know through that dialog box there as well, and we'll do our best to address that. Your other method of getting in touch with us is at the top right-hand side of your screen. You'll see an image with their arm raised, a figure there with their arm raised. You can also click on that and signal there if you would like us to speak up, to speak more softly, various options that you've got there as well. If you are still, though, having problems with your connection, or if you can't hear us clearly, please do contact your IT support. We are also recording the webinar today, and that's going to be available for you to download through our website. Just a few words then about Elspeth and myself. As I said, I'm a partner at Sheen & Tate, and I've been with the firm for about 19 years. I look after the business support department here, and we provide an outsourcing finance function to clients. What we're often doing is acting as finance controller or finance director to clients, and that service will include things like preparing your management accounts, your VAT returns. We'll also help with forecasting, business plans, and also your year-end accounts. Elspeth, who's with me, has worked in the department for 6 years. She manages a number of clients for whom we provide that full finance service, and that also involves a real day-to-day involvement in financial affairs and transactions, and a large part of that is cash flow management. So today then, we're going to be discussing why cash flow management is important, and we'll be giving you lots of tips on how to achieve effective cash flow management.
Yes, Carol, there's always a lot of focus on whether a business is profitable and looking at whether profit has gone up or down. But if profit doesn't translate into cash coming in, then the business will struggle to keep trading. So today we're going to look at ways to improve your cash inflow, manage your cash outflow, talk a bit about how to know your true cash position and how to evaluate that cash position. And we also want to give you an action plan at the end of today's webinar with 6 key points that you can put into practice straight away. We have a number of retail clients, and for them, any goods are paid for when the customer receives them. But for most businesses, invoices are issued for goods and services, and they need customers to pay in full and promptly. We've identified a number of tips to help achieve this. Now, some of them may seem obvious, but when you're busy doing the work of the business, it can be easy to lose sight of some of these. We want to begin by focusing on the need to know your customer. This does sound obvious, but it's extremely important. Do you have all the practical details, such as who's the contact for payment queries? Do you know the exact name and trading style of your customer's business? Is it a limited company or an individual trading? This can allow you to gather useful background information to assess your customer's creditworthiness, especially if they are trading as a limited company. If the worst happens and you do have to pursue them for non-payment, it's essential to know who you have contracted with.
Elspeth, I know there you're talking about moving really to a worst case position, but hopefully with good cash flow management practices, that can be avoided, or at least you're minimising the amounts involved.
Well, that's definitely our aim with our own clients, and these tips come from our own experience. But it is worth keeping yourself right so that should it get to that stage, everything's deemed done correctly. So staying in the legal area for a while, make sure you have confirmed terms and conditions at the outset and ensure that you have clear payment terms agreed in writing. Customers then have no excuse for not knowing when they're expected to pay. This goes hand in hand with establishing a standardised debt recovery routine. Show your customers that you expect them to stick to the payment terms by issuing prompt reminders and statements.
Yeah, the key is really to have clear procedures and timelines in place for your debt collection. I know that one client which Elspeth looks after has an extremely rigid procedure for monitoring rent debtors, and that really works well.
That's right. The tenants have all been told that rent should be paid within 7 days of being invoiced. Now, as all the invoices are issued on the first day of the month, we review debtors on the 7th and telephone anyone who hasn't paid to remind them. We then review debtors again on the 14th and would issue a formal letter at that point. On each of those dates, we also report any unpaid amounts of the invoices issued and payments received, but also of the chasing done. Now, I know I've run through a lot of detail and dates there, but this is a good example of a procedure for monitoring debtors. Invoices are issued, and then payments received are checked 7 days later, and again a week after that. On that first check, customers are contacted by telephone, and a week later, formal letters are issued to any who still have not paid. It's really important not to let outstanding debts grow, and that's why we report the unpaid amounts to the company director on both the 7th and the 14th of the month. He can take a view on the level of outstanding balance. Now, and this might just be the leverage needed to secure payment.
And what we'd like to do now is ask you to take part in the first of our 2 polls today. And those of you who've joined us on a webinar before will have seen the polls in action. So the question you'll see there on the screen we're asking you to respond on is, how many customers do you take a few moments just to select your answer, so whether that's none, a few, some, or a lot. So the responses are coming through on that now, thank you very much. And what we'll do is in just a few moments' time, we'll come back to your results. So please do keep putting your answers in there.
It's going to be interesting to see how many of you do think you've got a problem with late paying customers. Perhaps you're very lucky with the customers you have, or perhaps you're already applying some of the tips we're talking through to manage that situation. When we're dealing with debtors for clients, we apply the 3 Ps. We like to ensure that we're polite, professional, and persistent. Really, these 3 Ps apply in all dealings with customers. Don't give them any excuse to delay or avoid payment. Make sure you do what you say you're going to do when you say you're going to do it. Maintain a positive personal relationship with your customers. You're more likely to get the response you want if you adopt a friendly approach. The director of our rental company client keeps in touch with the tenants and knows their businesses. Don't be embarrassed about discussing overdue accounts, because remember, it's your money. Some businesses find it easier if the person chasing debts is a different person from the one providing the service, and who therefore has a client relationship with the customer.
Now let's just go back and look at those poll results, and those should be just coming up on screen now. So that's quite interesting that most of you are in that middle ground who have a few or some people who don't pay you on time, but there's one person there who's got a lot that are clients that pay late, and a couple there at the other end of the scale with none at all. So I think this is really an area that affects, well, it does affect absolutely everybody, and it's great that some are in the position with who've got customers that pay on time. And really our aim is today to give you more tips just to help you along that process. So thank you very much for taking part there.
Absolutely, and I hope that even for the people who say they don't have any late paying customers at the moment, these tips could still prove useful. Perhaps you are already applying them, and if you should have a problem in the future, you'd be forearmed. We've put together some specific tips for managing cash inflow. One of the main keys to good cash inflow is to invoice promptly. Now that probably seems like the most obvious tip I'm going to give you today, but Carol, you found a statistic recently which showed how important this
found that 20% of the businesses surveyed had forgotten to invoice for goods or services at least once. So that's not about invoicing promptly, that's businesses that are not invoicing at all. Now amongst those, 6% had forgotten to invoice for a job worth more than £10,000, so it's not restricted to small amounts. And when you stop and think about it, really, especially for small businesses, staff can be so busy providing the actual service to customers that they're not actually stopping to generate the invoices.
That's right, staff are so focused on the work that as soon as one piece of work is done, it's tempting to move on to the next piece of work. But actually stopping to invoice for that work ensures you're getting the reward for the work done. That is a benefit of having dedicated finance staff or an outsourced function. Invoices must be issued on completion of work, if not sooner. If there is a delay in issuing the invoice, the customer may feel they can then delay paying it. Invoices must be accurate and easy to understand. It's also important to make sure the invoice provides details for the payment methods, and the payment terms are clearly marked on your invoice.
We see a variety of payment methods amongst our own clients, and Elspeth is just going to take a few minutes now to run through some of those methods which would be most helpful to you in your cash flow management.
Well, we've certainly seen a move away from cheque payments due to delays and that lost in the post situation, but also because of the bank charges related to cheques. So there's been a big move towards electronic payment methods. The rent client that we've been discussing requires tenants to set up standing orders, but that of course only works for regular amounts invoiced at regular intervals. Alternatives to this are BACS payments and credit card payments. Another of my clients has just added a credit card payment facility which links directly with their accounting software, and this I believe these are outweighed by the benefit of prompt payment. A number of clients also ask us about direct debits because this puts them fully in control of requesting payment for their invoices, but there can be large costs in setting this up. Of course, unfortunately, none of these tips can guarantee that your customers will pay, and you may then have to consider a compromise. Customers may have an obvious cash flow problem, so you may want to negotiate a payment plan, or you may need to look at giving a discount to secure payment, especially if the customer is disputing the bill. Receiving slightly less money, or receiving it over a longer period of time, is often better than receiving nothing at all, or incurring legal bills to attempt to recover it in full. The legal process itself means that it may not allow you to recover the money quickly, but it can be useful for customers to know you would be prepared to take this route if persuasion fails. Now, so far we've focused on managing your customers, but inevitably your business will have suppliers, and they should be applying similar considerations to you and asking whether you're a good customer. So when it comes to managing cash outflow, you don't want to risk supplies being stopped, but at the same time you want to hold on to your hard-earned cash as long as you can before paying it over. Our tips on cash outflow mirror those for managing cash inflow, but there are slightly different considerations when you are standing in the customer's shoes. Yes, you must pay your suppliers within their terms as you expect your customers to do, so make sure you're aware of those terms and conditions. But don't be afraid to negotiate terms with them, either at the outset or because you've built up a good relationship with them. As well as negotiating the terms, make sure you've negotiated the best prices for the goods and services you're buying. It can be easy to simply carry on with the same suppliers you've always used without checking you're still getting the best deal that is available. So shop around to check what alternative suppliers can offer and speak to your current supplier about whether a better deal is now available. As with your own customers, make sure suppliers have between customers and suppliers, especially if there's an issue where payment won't be made by the due date. When dealing with suppliers, it's really important to consider your own payment methods and the costs attached. Some methods of payment, such as cheques, incur higher bank charges, as we said. Extended payment options seem attractive to spread that cash outflow over a longer period, but make sure you know the interest charges for doing so. Weigh up the cost of the supplier's interest against the interest charged on any overdraft facility you're using. If you're in the fortunate position of having a positive cash balance, do you really want to pay interest at all to spread payments where you could pay it in a lump sum? We've a client who's experienced positive growth, resulting in a much higher bank balance, but they stayed in a routine of spreading all expenses over 12 months with interest charges until we advised them to start paying these outright and save the charges.
Now, from what we've said so far, the key is really all about knowing the true cash position of your business. Now, Elspeth is going to, in a few minutes, talk a wee bit more about what we mean by true cash, but we thought this would be a good point to ask you to complete the second of our 2 polls today. And there you've got the question on screen in front of you, and we're asking, do you know your true cash position? What I should say here is we're not asking if you know your bank balance as per your bank statements. We're meaning something else entirely. And as I say, we'll talk about this in a few more minutes, but we were just very interested to see what your results were going to be there. So if we leave you to put your yes or no answers there, and we'll come back to that just very, very shortly.
Yes, as you say, Carol, the starting point for knowing the true cash position of your business is knowing how much money's in the bank, but that is only the start. So we've got some pointers for this, as it is essential. The first key presented to the bank, or payments received which haven't yet shown on a bank statement. Now that will tell you your true cash position at that particular moment in time. But this reminds me of the advice my driving instructor gave me when I learned to drive. He told me to keep my eye on the road, not the bonnet. Cash flow management is the same. You have to know what is coming up, not just your exact position now, so that you can react in good time, be proactive, read the signs and avoid danger. It's really important to look forward for a period, to factor in known expenditure such as VAT payments and other tax payments which don't fall regularly, or to plan for bumpy expenses such as major repairs or hardware improvements and time those for the business's benefit. For a pension scheme client, we prepare a rolling cash flow forecast covering a 12-month period. Now, this client would need to sell investments if more funds were required, and this allows them time to plan for this.
Let's go back then and look at the poll results. Thanks very much for your responses there, and they're just coming up on screen. So we'd ask, do you know your true cash position? And yes, there you go, most people have responded with a yes to that point, which is fantastic. You're obviously, most of you then have got a good handle on your cash position. But I wonder if we'd run the poll now after Elspeth's comments, how many people may have answered slightly differently. We'll just leave you with that thought in your mind while we move on to the next section where we're going to talk about reports. Because Elspeth has just spoken about a cash flow forecast that she prepares for a particular client. So we're just going to cover that and a few other reports which you would find helpful for cash flow management.
Yes, when we look at reports for cash flow management, the cash flow forecast is obviously the first report that springs to mind, but various other reports also feed into good cash flow management. For many clients, we prepare management accounts, and that might be monthly, quarterly, or even 6 monthly. At first sight, these show the profit for the period, which, as we said, is quite different from the cash position. A company with a large number of unpaid invoices will still have high turnover and therefore potentially high profit in the management accounts, but it would all be tied up in high debtors rather than cash. The balance sheet in the management accounts gives useful information on the cash position, and when reviewing the balance sheet, there are various questions to ask. Is the cash and bank balance in line with this time last year or the end of the previous period? Can we explain why it has increased or decreased? Looking at debtors, are they higher than previously? Is this because we're issuing more invoices or because more invoices are unpaid? Creditors, again, have they increased or decreased? If they've decreased, are we paying suppliers too quickly to the detriment of our cash position? Or if they've increased, are we buying more or just paying more slowly? Do higher creditors mirror any increase in the cash and bank balance? Now, some businesses will also have stock on their balance sheet. I mentioned earlier our retail clients who don't have concerns with chasing customers for payment, but for them stock is a real issue. Reviewing the level of stock in relation to turnover and cost of sales can indicate whether the stock level is in line with your sales level or whether it's increased or decreased. Now, if prices are about to increase, it may well be sensible to hold more stock than usual, but generally, stock management is about holding just enough. The stock itself should be reviewed regularly. Is there slow-moving or obsolete stock? And if so, is there a way to dispose of this quickly to generate some income, even if it's sold for less than was originally expected? A good commentary on the management accounts would highlight points like these to allow a better understanding of the cash position of the business, and this is an area where a professional advisor can be very helpful. I know I've run through quite a lot of detail here, particularly talking about the balance sheet, but we will be putting up our action plan at the end of the webinar, and there will be more detail in the handout which will be available afterwards. Often when we prepare a commentary on management accounts, we will also comment on how the actual figures compare to the budget for the period. This can be very useful to see if you're still on the road you expected and planned for. If sales are lower or costs are higher, should action be taken now before profits drop and cash is seriously affected? Take time to understand why things haven't followed budget, and plan a different route if necessary, or correct anything which hasn't been done to plan. I have a property development client for whom we do budget monitoring work without preparing management accounts, as that is the director's key tool for managing suppliers and assessing the position of the business. This budget is tied to bank funding, and our comparison of actual against budget allows him to ensure he is still on track with his original plan. As a tool for forward planning, the preparation of a budget in itself can be useful. Preparing the budget means the business must reflect on what has happened previously, what they expect to happen in the future, and build in any contingencies. This can then be linked with a cash flow forecast, which will allow ongoing monitoring of the cash position and allow a proactive rather than reactive approach.
Now, we've been talking there about a proactive approach to cash flow management, and that's what's required obviously when cash is tight in your business, but it also applies when you actually have cash as well.
That's right. Sometimes the cash flow issue is how to make a healthy cash balance work hardest for your business. At the moment, interest rates are so low, it's difficult to ensure you're getting a good return on your hard-earned cash, and this is as true for businesses as it is for individuals. A client asked us to calculate a working float, which they should retain in their current account, and advise them whenever the balance exceeded this level, so that those excess funds could be transferred for a better return. How to achieve a good return is an entire webinar in itself, but by managing cash flow, you can identify whether you have additional funds which could be invested, and consider how long they can be tied up or how accessible they need to be for future changes.
Now, we're now coming towards the end of our session, and I think it is nice to finish on a positive note. It really would be great if the issue of cash flow management always led to the problem of how to invest extra cash, as Elspeth mentioned. Now, we've got two areas still to as she mentioned, we'll talk about our action plan right at the end. So let's look at your questions then. We've had a number of questions coming through as we've been speaking today, and we also had a couple submitted to us previously. If we don't have time to talk through your questions today, we will respond to your points directly afterwards. So the first question I have, Elspeth, is about payment methods, because you spent a few minutes just talking about that area. Somebody, though, has asked for more detail about the BACS method of payment that you mentioned. Could you run through exactly what that means?
The BACS payment method is incredibly useful. It first requires you to set up a BACS facility with your own bank. Now, a lot of businesses may have that in place for dealing with salary payments. BACS payments can then be made through a BACS accredited bureau, such as Sheen & Tate. It allows you to pay a number of suppliers at one time, so it can be very useful if you want to do weekly or fortnightly, monthly, any kind of regular payment run. So a list of payments is created and uploaded, and that becomes day one of a processing cycle, and on day three, the suppliers included in that payment run will receive payments electronically in their bank accounts. No dependence on post and much less risk of delay.
Thanks, Elspeth. As Elspeth mentioned there, Sheen and Tate are a BACS accredited bureau, and some of you may have experience of that through our payroll service, but we also do make supplier payments for our clients using that BACS facility. Another area that we can also help with is direct debit collection. Where you're perhaps running a membership organisation or that sort of thing, we can, through that BACS facility, arrange those direct debit collections. So something for you to think about there. It is a good method of payment in the right circumstances. We have got a few more minutes for questions, and there's a couple more that I would like to cover here. The first one is in connection with reporting. Again, we mentioned that in the session, and somebody has asked if any of the reports that you talked about, Elspeth, can be extracted direct from account software.
Certainly, the main accounting software, Sage, QuickBooks, Xero, they'll all produce for you a profit and loss account and a balance sheet, and you can set the dates and decide what period you want to cover and how regularly you want to see that. Certainly within some of those, you can also enter budget information for the period, and it will generate a report that compares actual to budget. What it won't do is give you any explanation beyond the bare figures. So it's a useful starting point, but it's really those questions that you ask about the figures in front of you that will give you really key information, and a commentary to accompany those reports can be very useful for that.
Yeah, so your account software is always your starting point, but it's what you do with the information that's extracted from your software,
yes,
isn't
definitely.
it? Great. Now, anyone who has responsibility for cash collection, I'm sure there's a few listening in, will have experience of those customers that give excuses for not paying on time. And one of our people listening in today has asked, how do they deal with some of those common excuses that are provided? And the one that's has been mentioned is somebody saying your invoice is on the next check or payment run. So what do they do in that situation?
Well, the first thing I would say is, we talked earlier about the need to know your customers, and I think if you have a good relationship with your customers and you know them, you'll have a good sense yourself of whether this is genuine or whether it is purely an excuse. But either way, if you're getting told the invoice is on the next check run, there's certain things you can run through with them. Check that the customer has all the correct details. Ask them to specify when that check run date is, and call a few days beforehand to make sure your invoice is going to be included in that payment run. If they're talking about check runs, you may want to raise the question with them of an electronic payment. And the day you're expecting to see payment, check to see whether it's been received in the post or received in your bank account. And if for some reason it hasn't, chase that up quickly so that they know you are monitoring the position.
Yes, I suppose in some instances excuses they can be genuine, but in others it is a delaying tactic that customers will use. The other one, of course, that comes up is somebody just simply saying, I haven't received your invoice. And again, that's really a delaying one, isn't it?
I think that's a delaying one. Again, make sure the details that you have for them are all correct. And if they are, you can be reasonably sure they should have received it. But to minimise any delay after that, offer to immediately email a scanned copy of the invoice or fax it to the person you've spoken to. Follow it up then with a phone call confirming they have received it, and ask them at that point to confirm when you're going to receive payment.
Okay, I think we've got one more question coming through, if you just bear.
So the question is tips on how to maintain a personal and professional relationship with a client who pays persistently late but provides a regular source of work.
Okay, so I don't know whether you heard that there. The question is, somebody is looking for tips on how to maintain a professional relationship with a client when that particular customer doesn't pay on time, but they do provide a consistent source of work. That's a really difficult one, isn't it?
It's a difficult one. It's work you want to keep, but at the same time, you need to be paid for the work, for it to be of value to your business. Regular communication, definitely. Possibly sit-down meetings to discuss with them what you're expecting from them and whether there are any reasons why they're paying persistently late. Is there anything you can do to help them in terms of the payment methods you're willing to accept? And is there any compromise you can reach where they'll pay a little sooner, and even if it's out with the payment terms you really want, it could keep that relationship going, and perhaps down the line they could be paying closer to the time scale you really expect.
Yeah, really it's back to that point we're making right throughout about relationship and communication and having that dialogue early with your customers and being upfront and honest, I think, with each other as well. Now, I think that's all the questions that we've got at the moment. If any more do come to mind, please do contact us after the webinar. We do have one further slide that we would like to cover, but which Elspeth will do at the end. But there you've got on the screen in front of you the details of our web address, where you will we're going to be putting the recorded version of the webinar, and you can see our email addresses for any further questions. What we're going to do after the webinar is send you a link with a version of our slides that we've been going through today, and we'll also send you a copy of our action plan, which Elspeth will talk about in a second. What you'll also receive from us is a short feedback form asking just for your very brief feedback on our webinar today, and it would be extremely helpful if you could take a few minutes of your time to complete that. As I said at the start, we do have other webinars coming up, and you'll receive details of those shortly. Our next webinar is in January, and as I said, that's on business plan preparation, and I do hope you'll all be able to join us for that. Elspeth is now going to leave you with a few final thoughts and that action plan we mentioned.
Yes, so as promised, there will be a fuller handout available after the webinar, but just to summarise 6 key points from what we've been talking through today, and hopefully you can put these into practice straight away to help with your own cash flow management. So, as we started right at the beginning of the webinar, know your customer. This is the essential starting point for good cash inflow management. Make sure you're invoicing promptly, and don't be caught like the businesses in that article who don't issue an invoice at all and therefore aren't going to be paid for the work they've done. Review payment methods. That's both the payment methods you're willing to accept from your customers and the payment methods you're using to pay your suppliers, and consider the costs attached to each and the timing relating to each. Establish a debt recovery routine. Monitor those outstanding balances, act quickly, and let your customers know that you will do something about them. Monitor the true cash position of your business. Hopefully the pointers we gave today to look beyond the bank statement or even the bank reconciliation will help you know in more detail the cash position of your own business. And finally, management reports. We talked quite a lot about the different reports that can help you to assess the position of your business and the questions you should ask about the figures that you'll see in those reports.
Thanks very much, Elspeth. And as we said, we'll send you all more information on each of those areas. Thanks again, everybody, for joining us today and for your participation with the questions and the polls. It's been fantastic to have you all joining in with us, and hope to see you on the next webinar, and I hope you enjoy the rest of your day. Thanks very much, everyone.